Hello, welcome to another episode of Elephant in the Room. How is everybody this Thursday evening? How are you, Taranjeet?
Very wet,
Well,
and it's very gloomy, and it's a proper Thursday evening, I must say, here in Kuala Lumpur. So nothing new, but I am very intrigued about who we have today, and allow me to very quickly continue with this journey that we are on. A bit of a recap. We have started out this reality discussion very emphatically over the last 2 weeks. We talked about the skills that we are looking at. We talked to people like Kevin Yong in the area of recruitment. We talked to people like Renuka Singham about the visual imaging that we need to portray. Adli Wahid in the area of Sime Darby Oils, and David Jones about what the new managers need to look like from a CMI, Chartered Management Institute focus. This week, we've been very fortunate to have Kevin Tan, who is the COO of Sunway Malls, join us. This was yesterday. We explored with him the various issues related to mall management, tenant management, and it was fascinating to hear some of the outcomes that they are now working in conjunction with the tenants, not only to try and reduce the burden, but also be vested in the success of the tenants. Because you know what? Success of tenants ultimately reverts to success of mall owners, which is very nice. And today, who do we have planned out, Mui Han?
yes, Taranjeet, as we have been advertising, mentioning, promoting, today we got a very special guest to actually help us to understand the life insurance industry in Malaysia. How is the industry been performing as overall in the last 3 months, and how it's going to be doing in moving forward in the next 6 to 18 months, all right? So we are very fortunate to have with us this evening Mr. Rohit Nambiar. Rohit is, of course, the CEO, the Chief Executive Officer of AXA-Affin Life, Berhad. Under his leadership, I must say that AXA-Affin AXA-Affin Life Insurance have launched several industry firsts, including what is called the AXA eMedic, the first online medical card in Malaysia, as well as the Startup Up Plus, okay? So the first in the market transformational wellness program, which motivates Malaysians to be healthier. Rohit has also recently won the Young Leader of the Year award at the prestigious Asia Insurance Industry Awards, as well as he is also the CEO with the HR Orientation Award at Malaysia's Employer Brand Award in 2019. He, of course, brings over 15 years of insurance industry experience globally from key roles across different parts of Asia, within countries like India, Singapore, Malaysia, Hong Kong, and Vietnam. So without much ado, welcome Rohit to Elephant in the Room.
Hello everyone. Nice to see you, and nice to speak to all of you.
Thank you, Rohit. Thank you. And I understand that you are on your break. And so thank you so much for giving us this opportunity whilst on your break. Thank you for that, Rohit.
My pleasure. So, it's always a pleasure.
So let's start it off. It's always nice to talk about what the bigger picture looks like, especially in these unsettled times. And that's a very nice question to start context setting. So what does the bigger picture look like in terms of the business landscape, specifically for life insurance in this industry, given this last 3 months that we've had with MCO and the CMO and now the RM CO that we are experiencing? Over to you, Rohit.
So I'll give you a quick context. So last year, the life insurance industry in Malaysia grew at 14%. We were the fastest growing insurer. We grew at 74% last year. The market was growing at 14%. In Q1, grew only at 1%, which means it was kind of flat. We actually grew at 150%, which is why our market ranking over the last 2 years has gone from number 14 to number 7. But I think there's an important point there. The point is the market growth was only 1% in Q1 already, and we hadn't yet faced the real brunt of COVID. My sense is Q2 would be quite bad for everyone across the board, including us. You would expect a decline, although we don't have any official figures. I would expect a decline. We need to put things in context. I always say what's happening today is really a 1 in 100-year event. In insurance terms, we always plan for this. We don't want it to happen, but we do plan for this because we need to be sure that our balance sheet can take the situation, etc. So typically, companies with strong risk management practices look at it. In March, the equity market fell double-digit. The bonds, widened, and you had COVID. So you can imagine how badly the market was impacted. It's really a 1 in 100-year event. GDP down by 20% in UK is pretty unheard of, right? So my sense is it would probably take not just the insurance industry, but in general, countries and markets across the world, anywhere between 4 to 6 quarters to make good this 1 quarter that's pretty much gone. My own sense is insurance will pick up faster, not because I belong to this industry, but it is a very strange thing with insurance that actually people buy more insurance when there are 3 events. Insurance is a very trigger-based product, other than motor products which are compulsory by law. One is when there is somebody in the family who has had a family or friend who's either died or who's had some disease. Immediately our antennas go up. The second is when we hit certain life stage, like you're turning 40, you're turning 30, you're getting married, you're having a kid, blah blah blah. And the third one is when there's either a natural catastrophe or a pandemic. The same thing happened in many countries when there was a national level flood or an earthquake. Insurance purchase actually increased. So my own sense is that awareness will trigger a significant uptake in insurance towards the latter half of the year.
Okay. So, I mean, as not to be disrespectful, but just based on what you just explained, seems like every time there is a calamity or there's big events, the awareness just raised in that sense. And I think that is also observable in our, in my own family or circle of friends, especially when somebody suddenly get diagnosed with a very serious terminal disease. The next thing you know, the relative who is an agent gets surge in business, Okay. So maybe I just want to welcome those who have just joined the show. Welcome to Elephant in the Room. This evening we have with us the CEO of AXA-Affin Life Insurance, who will be sharing more with us on the industry, especially the life insurance industry in Malaysia. So if you have any question, please do put it down on the comment section so that we can continue the conversation. So maybe on that score, thanks for painting the landscape for the industry. Maybe let's now zoom into AXA-Affin Life specifically. So what are some of the things that you all have been doing innovatively over the last few years, and how has it been to support you during this slowdown period? Or is it you're also still iterating and changing things to move forward? Maybe you can give us some perspective on that.
Very, very quickly, because that's the show's model, right? So very quickly speaking, there are 3 issues with insurance across the world. Insurance is too complex. I've been in insurance for 17 years. I don't understand many of the products myself. Insurance is too pricey. Why is it pricey? Because many times we have to hide so many costs, which makes the price expensive. And insurance is not trustworthy in most countries across the world. Study after study shows insurance and healthcare are 2 of the least trusted industries. Which is quite shocking because you would have thought this is an industry where trust is so important.
Yeah.
The reason is very simple. For too long, we have made this a very opaque industry. So what we did at AXA-Affin Life 2.5 years back was we came up with a concept which said We want to be the preferred health and protection insurer for millennials. We will speak the millennial language, so our insurance can be either bought through an agent, but digitally assisted, or online direct. And we don't believe there's a channel conflict. In fact, channel complements each other, because channel A is speaking to a different type of customer, channel B is speaking to a different kind of customer. And when we launched that, the market obviously was, thinking maybe we're too brave, too bold. And you know what? 2.5 years later, everybody's trying to do the same. But the good thing was, because we had that fast start, and we have this concept in the company that every product has to be launched in 3 months. In insurance, typically, we're talking 8 months plus, in average. So everything is launched in 3 months. So we were able to test, learn from the market, and keep moving on. So 2.5 years later, we are fully digital. We have a lot of health solutions, which we believe is beyond insurance. We don't want to just pay a claim. We want to actually help the health of the customer. I'll give you just one specific example. I'm not going to go into all the examples. We have a program called Fitter Me, where basically for those who are fit already, you just need to walk more and you get more discount. Very simple. So we want them to be more active. And the discount can be as high as 24%. It was there last year. The next one we have is a program called Better Me, where people typically with high cholesterol, blood pressure, weight issues, hypertension, these customers are typically loaded up and have no other option. But what we said is, we will load you up, but we will give you a 9-month health transformation program with the help of Naluri, Biomark, and BookDog, which are all local opinions. We provide you a health coach, a psychologist, a nutritionist, free Bluetooth weighing machine, and blood test vouchers. And if every 3 months your scores improve, we're going to give you back immediately some money. And after 9 months, if you come back to a normal score, which is what we are predicating, then your loading is removed and you are put in as a normal customer.
Wow.
So that saving can be anywhere between 50 to 400%, because the loading can be 50 to 400%. So that's precisely how we are dealing with this. I'm a big fan of what Jeff Bezos says. I don't believe the next quarter result that I'm going to have is because of the actions I took now. I think that's completely nonsense. When in this industry, we need to think, make a change and get the results in. It doesn't happen that way. The results for the next quarter have been done 3 years back. So for me, what result I am getting today is a manifestation of the strategy, the tough decisions that were taken in 2017 Q4 and 2018 Q1. Now my challenge is, how am I going to be ready for 2023? Not 2020. 2020 is done. It's about 2022.
I love it. I love it. I really like the positivism that you have spinned here. And you're absolutely right. And I think many times organizations are only limited by that 1 year or 18-month time horizon, which is a bit too short. And I like this. Now, allow me to deep dive a little bit more. And this may be a bit sensitive, but I will ask it anyway. By you going into this transformational period, looking at digitization, how did that impact the people that you had on board in terms of the way they think, in terms of the way they work, and how were they being managed by the managers? What's the deal there?
So I think so there are two things that are core for me. I've written about this extensively. There is no other secret sauce. When somebody comes and tells me, hey, you actually have no barrier to entry. If I want, I can get into digital. If I want, I can launch this product. To be very honest with you, every single thing I do today can be copied, because it's provided by some other partner to me, or, the technology is available, right? Technology is anyway over-glorified in today's world, and people are under-prioritized. But the secret sauce is people and culture. So we had a big focus on people and culture. But people and culture meant we put in place or motion a concept called, we want AXA-Affin Life to be a fun but uncomfortable place to work in. Which means we want people to feel good about coming to work, but I don't want people to feel that it's chilled out to come to work. And that's the concept we built in. So we actually took some tough decisions on people. I've always believed that, the people decisions, when delayed, come to bite you later. It's good for both sides. So there were some tough decisions we made, but there were some other decisions we made to give people an opportunity. Out by Mui Han in the beginning, the first product we launched, I can tell you the whole team, except for Dr. Azlan and myself, were all millennials. The whole group was millennials. The one who led the project was early 30s. So here's an example of you empowering them, putting them in the zone, and you see results coming up. So my point is, I think for people, for too long we think it's people. No, it's about showing them the right direction to begin with, giving them the confidence by reiterating it's okay to fail. I have said this again and again. If you want to innovate, you need to be ready to be fired. If you aren't, you are not going to innovate. You're just going to do pussyfooting improvements. If you really want to innovate, be ready to be fired. I think I've been on the verge of being fired many times in my career because something has gone wrong. But that's the reality. So showing them that, showing myself as being vulnerable was very important to the team. So they realized, oh, actually we can make mistakes and nobody's going to come behind me and hold me accountable. And the third was also creating that ambience. So, we were fully agile 2.5 years back, which means we dress casual dressing 5 days a week. We're an insurance company. Nobody has an office, including myself. No desks, casual working, flexi working from home. All of them carry their laptops home, their mobile phones home. That's how we work. Now, for some of the tech guys, you might think, oh, what's great about this? But for insurance, I can tell you many stories today. When COVID happened, there were companies who told their employees to come to office and carry their desktop home. For us, Friday night, the Prime Minister announced it. Saturday morning, executive team got together, had a call, and we announced, okay, guys, you can't come into office, basically. You earlier had a choice, but now you can't. And we got to go. And so that was the preparation. And for me, the results also speak a lot. Our employee NPS, which we are obsessed with, because we track both customer NPS and employee NPS. Our employee NPS was negative 37 3 years back. Today, it's plus 33.
Wow.
And our attrition today is less than 5%. So that tells you a story that, the good people want to stay here. So that's what we're talking about.
Wonderful, wonderful, Rohit. Thanks for sharing with us all this wonderful thing that you are doing in AXA-Affin. And it's really inspiring. And I really like your part on the whole idea of risking failures, because I think true learning happens only when you learn from your mistakes, so to say. And I think these days, as a professional, especially observing many corporates, we have overemphasized the need for success, that we frown upon even little mistakes, that we don't give people the room to try. And you're right, as a result of that, then it doesn't sound the right thing. One way we say we need to innovate, think out of the box, but at the same time, every other small thing that you do, then you get hammered for, you get punished for. And I think that is a very, very good perspective to put in the organization for innovation to thrive. Okay, I have a few audience questions here, which are slightly unrelated, but just wanted to get you to answer them since they have asked that. First, we have from AJ Cole. So you said that just to follow your input, the growing liabilities in your book, what will be the other types of assets aside from the typical bonds and fixed income to buy into? Any ultra low interest rate environment to move up the risk curve into equity? Wow, this is a very technical question.
Great question. So it's a great question because investment is something I'm very passionate about. Not that I'm very good at it, but I have people who are good at it in my company. So my head of investment, Alex, is quite a smart cookie. Coming back to the discussion, I think, yes, low interest rate environment is here to stay. I do believe that low interest rate is going to be the future. Low interest rate is typically never good for insurers because it means you have to match your liabilities, your commitments, etc. So what we have done is three things, right, without going into too much detail. One is we've changed our business model over the last 2.5 years. We've moved towards more health and protection. 93% of our new business now is health and protection investment linked. So obviously, there's less strain on our book. The second one we've obviously matched our ALM quite aggressively. Our ALM duration gap today is less than 1, which I think is pretty amazing. Just to put that in context, it was 2.5 last year and above 5 3 years back. So we've significantly reduced the risk of that. The third one on the asset side, I think we got to be very careful. Why do we need to be very careful? Because equity, yes, we do have exposure on equity, but As I told you, I personally think it will take 4 to 6 quarters for the world to come back to some semblance. Today, speaking with a great deal of control, my view is any equity market movement is very cyclical. Why do I say it's very cyclical? The market is waiting for some good news. It's not so dependent on fundamentals. It's very there's a lot of technical trading going on. Minus 20% GDP, 5% unemployment in Malaysia, India having record unemployment, US having record unemployment. You would say these are not good signs, but the equity market has still been doing very well in these countries. The reason is it's more technical, it's more cyclical. The market tends to price in future improvements. Now, come Q1 next year, if the improvement doesn't happen, you know what's going to happen. So the question is, I wouldn't guess it out. I'm not someone who's going to guess that out. My job is, I'm an insurance company, not an investment management company. So my job is to protect the assets of my customer and my shareholders. So obviously, I tend to be more conservative in my approach. So that's why, as I said, I have cut my duration gap. I have less equity exposure. And more importantly, I have moved away from product lines I don't want to do. So that's kind of how we're reacting.
And that's great because you have focused and zoomed in on what matters to you. And you've left the other side for others to take on because you know what? You were never going to do it anyway. So that's very nice. I like it. I like it. So focus on the core that you are good at and leave the rest to somebody else to take over.
And that's a great point. Just to add one line on that one, Taran. I'm a big believer in partnership. I have a lot of partners. I have 23 over partners. The reason is I'm very clear. At the core, my job is insurance. My job is to ensure I sell the right product. I pay the claim to the customer. I take care of my customer. Everything else, I'm not an IT company. I'm not a digital company. Everything else, there are enough people out there to provide me the solution. I will partner with them and I will work with them, but I'm not going to go and create the whole empire.
And this is the whole area of digitization. It is about ecosystem management. It is about you doing the right thing for everyone. So there's a nice reverberation that goes across. On that note, there's a very interesting question raised by Mike. Mui Han, if you could help out. Now, Mike asked this question. Will premium go up after the MCO? In which products and for what age or gender groups? Now, just to let you know, Mike comes in from Singapore. So he's looking at it from a Singaporean perspective. What are your thoughts on this very quickly?
That's fine. So I think across the globe, insurers are reassessing their capabilities. There could be some business lines like business interruption cover, although I don't belong to GN, I'm not speaking for AXA, right? My sense is some of these products, the prices would go up because with this event, reinsurers as well as insurers are going to find it very difficult to sustain that business model. Health business across the world, and especially I can talk to you about Malaysia, is our annual medical inflation is 14.5%. At 14.5% annual medical inflation, it's impossible for anybody to keep the prices standard or only cover for normal country inflation. So health premiums will go up like mature countries, but it will not go up across the board. What companies will do is they look at cohorts. Also, this cohort I'm not making money, this cohort I'm not making money, and they would tend to reprice. So repricing would happen, which is why we highly recommend people to buy insurance early because that will help them. Having said that, in the short term, there could be some business products where you actually could get some good deals as well. Motor and travel are two that come to my mind because one, not many cars are being driven on roads, which means the claims ratio should be better. And travel is another one where not many people are traveling, so the travel insurers would be quite keen to get more customers in. So if you ask me, insurance is not a short-term product, it's more a long-term product. So would price increase? If you ask me, yes, but it would be normal increase that you would expect. I don't think COVID is going to drive an increase, except for maybe specific areas like business interruption.
Okay. Thank you for that. One more question from our audience. I think KJ Ko has another question. So you're asking whether life insurance, at least in Malaysia, maybe in that context, will be transitioning into wealth management type of business, in part facing competition from the likes of the banks and the fund managers. Would that be possible in that sense?
Possible. I won't do it. I'm not in that space. It's possible that some life insurer may want to become a wealth management firm. AXA do have AXA Wealth in some countries, in Europe in particular. We do have other companies that we own like Swiss Privilege in Hong Kong. I don't expect us to do it in Malaysia for the simple reason that we want to focus on health and protection. The IFA space in Malaysia, unlike Singapore, has not yet matured, has not yet evolved. There's a lot of room left. Most of the IFAs, with due respect, still sell mostly agency type products. And the real complex products are mostly sold through either Labuan or through Singapore. So my point is, I think there could be someone who wants to take that space, but it's not a space for me. I prefer playing my core area, which is health and protection for millennials. That's what I want to be.
Great. I think that's very focused and wonderful, and I like that as well. I echo what Taranjeet said just now. So one last question from us before we close the show. So what would you foresee the 2-3 big challenges that the life insurance industry would face in the coming months? Maybe give a horizon between anything 6 to maybe up to 18 months. What would be the 3 biggest challenge you think that will be?
Okay. I just want to give one advice to all the people who would be attending the meeting, because I feel it's important for them. If you are a business owner today, please ensure you have a clear plan and a plan that's true to yourself, which is, what is my best case scenario, what's my realistic scenario, and what's my worst case scenario. If your financials do not stack up for the worst case scenario, it's time for you to revisit the very survival of your business. Because many times I hear people saying, I'm hoping things will come back, but you can't just hope, and then your worst case scenario clearly shows you cannot survive. Now for life insurers, I think there are 3 parts. One is now suddenly all the life insurer wants to talk about digital. Digital is not something where you can just switch a button on and say, boom, I'm digital. There will be many people who will come and tell you that I have a platform, buy my platform, everything is digital. If it was so easy, many others would have done it. Digital is culture. You need the culture, which is people understand digital is about agility, speed, learning, taking risk, failing. You need a very different culture. So that's for me, that's for me the biggest challenge ahead of this industry.
Yep.
The second one for me is the investment side is going to be very, very difficult, because the equity market is going to be volatile in my view. The bond markets are definitely going to be volatile as well. So, because insurers are limited by how many investments, where we can invest in, it's going to be quite a challenge for us to manage that portfolio and ensure we are returning to the customer, as well as to the shareholder. The third part for me is going to be that if we don't disrupt, somebody else is going to disrupt us. So that's why I believe it's better to disrupt from within than outside. So
yes.
I think it's very, very important for insurers. But I want to warn insurers about one small point. I see too many people talk about, oh, this is how I'm disrupting. I've set up the most fancy innovation lab. I'm not a big fan of these innovation labs at all. Because innovation labs come up with the most funky, geeky things. And then how do I use it in the business? Nobody knows.
Yep.
So you have to be very specific. If you want to disrupt, where do you want to disrupt? What do you want to disrupt? Like my team comes up with hundreds of ideas. I have 4 rules for them, and that I will end you with. First, is it health and protection? 2, is it simplifying an existing pain point? 3, will it improve my customer experience from the time he takes to buy a product? So today we have a rule that any product which takes more than 10 minutes, you cannot put it online. Okay. The fourth and the most important is, in the long term, is this going to make money for the company? If the idea does not stack up on any of these four, forget it, don't waste our time. Just move on.
I love it. I really love it. And on that note, Rohit, let me just ask one last point. What would be the two things that you would like to share with business owners? Business owners, not insurers, yeah? Business owners in this very unsettled times. So,
So
given
I,
where we are coming from, what would be the one or two things?
so Taran, I think I just briefly mentioned. First one for me is, please plan. Have
Yep,
your best case scenario, realistic scenario, conservative scenario. I see a
yep,
lot of people come up to me and say, you know what, I know it's gloom and doom, but I'm going to hold on. You can't hold on if it's gloom and doom.
yep.
You either got to change or you got to get out of that business. As simple as that.
Correct,
I love
correct.
what Cuban told on Shark Tank. An entrepreneur who stays in a failing business longer than required is a failed entrepreneur. He can never be another one. So you cannot stay in
Yep,
the same business again and again and hope for it to, improve. The second one is cash is king. Cash is king at this point in time. Be very careful in how you deploy your cash. Be focused. I tell my team the time has come now to deprioritize more than prioritize more. Deprioritize.
yep,
Every new initiative, remove something. Only then you add something.
yep,
We need to be
yep.
laser focused on our prioritization.
I like it. I like it. And you know
Wonderful.
what, buddy? This is absolutely great. I really love the soundness that you have brought to the table. Thank you very much. Thank you very
Thank you
much.
so much.
Muihan, back to you.
So thank you, Rohit, once again. We will leave
Thank
you
you.
now. We will see you later in the back studio while me and Taranjeet do the show. So thank you once again, and on the behalf of audience, thanks for your perspective. All right, Taranjeet was a
Wow.
wonderful. Wow, really. I
Wow.
really feel that the kind of innovative measures that have been taken, and it's over the last 2.5 years. It's not recent as well. So, like it, whether they had a crystal ball or no crystal ball, and I think this one we talked about in our previous show. COVID, no COVID, crisis, no crisis, pandemic, no pandemic. As long as you keep pushing to do the right thing, come what may, then you're always prepared and you're always
Absolutely.
ready to take it on, right?
Uh,
So, any last words that maybe you want to just give our audience?
Sure. Sure. And I think, and thank you for that, Muihan. I think there are a couple of things here. I like the positivism that he brought to the table, Rohit. I like the fact that they were already thinking about this well ahead. And we have lots of companies, to be fair, lots of companies do it. But whether or not they are successful in implementing it, that's another question. I thoroughly like the pearls of wisdom that Rohit has shared with us, and he's itemized it. Number one, this; number two, this, and it goes back to what we have always been talking about in terms of cash preservation and cost containment. Absolutely. The other one that I truly like, and I like that comment that he made. If you want to innovate, be ready to be fired. That's it, and that's the reality of this digital space that we are playing in. Make the call, make a decisive call, and then let's see where the dice falls. And that's absolutely brilliant. Finally, I think his last comment around wanting to ensure that it is customer focused with a maniacal focus on what works in this regard. I thoroughly loved it. Muihan?
So yes, we have come to the end of the show, and today we are very excited. Just a quick one. Tomorrow we will have Prof. Sata Bawani with us. So please tune in when we want to explore this whole focus of digital as well as disruptive leadership, and that will be another exciting show that we have on. So with that, thank you once again. Yeah, you want to add
1 minute.
something?
Did we do a shout out to all our audience?
Today we did a comment shout out, not a face-to-face shout out. Okay.
No
So I think
worries,
I
no
covered
worries,
everyone. Right? Good.
no
So with
worries.
that, thank you very much, everyone. See you tomorrow at 6 p.m. and
Stay
have a good
safe. Bye bye.